Good morning. Welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Thursday, March 4th, 2010. It's 11:30 a.m. Eastern Standard Time in the U.S. It's 4:30 p.m. in London. In Mexico City, it's 10:30 a.m. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL Instant Mail address is CATEX-TV. Some economic news before we start. The pending U.S. home sales actually dipped a little bit. The other news, though, is that the unemployment rate was much better than people expected. We'll get to that in our news. And also the Federal Reserve is saying that the economy grew. By and large, the general feeling is that the climate is getting better in the U.S. and the stock market is once again up today. It's up about 22 points right now. In other news, before we get to our news, the governor of New York, David Paterson, who last Friday announced that he is not running for re-election, has apparently, according to the New York Times today, been hit with an ethics charge by the state of New York Ethics Regulatory Commission because he apparently improperly accepted tickets to Yankee games for the World Series last year. So the news just keeps getting worse for Governor Paterson. I don't know what's going to happen. And now to our main news. The big news in the reinsurance industry is the development of a $3 billion plus giant down in Bermuda. Marty Becker and John Berger have combined and they have now merged Harbor Point Limited with Max Capital Group. The new company is going to be called Alterra Capital Holdings, A-L-T-E-R-R-A. The deal will give Harbor Point shareholders a 52% share in the new company. Max Capital shareholders will have the other 48% held. The Harbor Point book value is right now about $1.6 billion and change. Max Capital has a market capitalization of about $1.3 billion, so it's a $3 billion deal. Following the close of the deal, Mr. Becker from Max will serve as Alterra's president and CEO. John Berger will serve as vice chairman and chair of the board's underwriting committee and CEO of reinsurance. Harbor Point chairman Michael O'Reilly will serve as non-executive chairman of the board. O'Reilly is the former CFO of Chubb, from which Harbor Point was spun off back in 2005. There'll be a lot more on this over the next few days, and we'll be reporting it. More on Chile. Reinsurers, particularly Europe-based reinsurers, could face about 3/4 of the insurance bill as a result of Chile's 8.8 earthquake. This is according from AXCO Insurance Information Services in Britain. If losses edge toward the high side of current estimates, about $8 billion, then it could be the second costliest in real terms ever, being beaten only by the 1994 Northridge earthquake, which cost over $22 billion in 2009 dollars. However, AXCO mentions that reinsurers have been making money from Chile earthquake risk for years, with loss ratios in the single digits. AXCO estimated that reinsurers assumed about 74.6% of Chilean quake risk in 2007, with a loss ratio of less than 1%. The biggest reinsurers in the country, counting intra-company cessions, include Zurich, MAPFRE, and RSA Seguros. Zurich has told Dow Jones that it had about 7% of the Chilean life and non-life market, and that it reinsured only its own business. We mentioned that RSA has already capped its loss estimate at about 30 million pounds. Lancashire is a new name that popped up. They said yesterday that it had exposure to risk in Chile on onshore energy property retrocession, property direct and facultative, and property cat. And we mentioned that a refinery in Concepcion is going to be down for a number of weeks. I don't know if Lancashire is on that. Lancashire said that it was premature to estimate the extent of any potential losses. However, the news sent share prices of Lancashire down by 3%. Now, one other point here, AIR is coming out with new information saying that about 90% of the towns in the epicenter area actually are likely to have been destroyed. AIR said that damage to port infrastructure and elsewhere would extend significantly the interruption of business operations of Chile's lucrative wine and salmon industries. More on the wine industry in a bit. Meanwhile, back to Bermuda, it seems that the March 12th special general shareholders meeting is scheduled for next Friday, but it may be anticlimactic if reports are true. The Insurance Day has an article. They say that the control battle actually may be over finally, and that Invesco has won. A statement released late yesterday afternoon from a group of institutions and individuals representing between them about 45+% of Omega's issued share capital confirmed that that group of 45% had already voted in favor of each of the Invesco resolutions and against the recommendations of the current Omega board. So add the 30% holdings in Omega by Invesco, and you're up to 75%. So this could all be finished. 75% have voted their shareholders in favor of the changes proposed by Invesco. So that would mean that John Coldman, the former Benfield chairman, will become the new Omega chairman on March 12th. Now you remember that yesterday Omega attempted something, a Hail Mary pass or something, when it named securities firm Senkos as the troublemaker in the proposed coup. Omega had published details of a February phone call between its own lawyers and Invesco's lawyers, which implies that Senkos was pushing for the changes to the board and that it was not Invesco's idea to petition for the general meeting. Senkos has vigorously denied that. The situation in Greece is one of shell shock right now. Prime Minister Papandreou has released the details of his new austerity budget. The population is somewhat bewildered, and there's a tremendous amount of anger developing. There's going to be a 3-hour general strike called across the country this Friday. Meanwhile, the chairman of the German Insurance Federation, a gentleman named Rolf Hohnen, announced that German insurers are holding Greek government bonds worth 10 billion euros. Mr. Hohnen said that this poses no danger in terms of volume. He said that the German industry is holding about 1.2 trillion euros in investments. He said, unlike banks, we don't expect that we have to make short-term write-downs. Insurers usually hold such investments until maturity. He said, we do have a keen interest, though, that the Greek crisis be resolved soon. Such developments are important as they have a direct impact on the level of interest rates. No kidding. Back to the Chilean wine situation. If you're a fan of Conchitora wine, this might provide some solace to you. Wine insurers with exposures in Chile will face a lot of claims resulting from the quake. The quake destroyed 13% of 2009's total production. The wine industry in Chile has calculated its losses at $250 million US as a result of the quake. That's about 125 million liters of wine lost by vineyards affiliated with the Vinos de Chile Association, which represents 90% of the country's wine industry. The association president said that it will not be a catastrophe for wine producers because the great majority of the vineyards have insurance. He said the 2010 harvest, which is soon to begin, will not be affected as damage was caused in the casks that were full, but the wineries do not have any problems. I'm not sure I understand that, so where will the losses be? We'll try to find out more. Stock market is still up about 21 points in New York. We'll go to a word from our sponsors.
This is a representation of the CATEX Global Exchange, showing how a transaction between a broker and a market might work. Here, a market in London is looking for a way to diversify its risk, but the paperwork involved is daunting, and the market knows it is a tedious process. Fortunately, this market is a member of the CATEX Global Exchange. The market will have an access page to the exchange where it can log on and see the risks that have been posted by brokers it knows for review. Here, the market sees that 2 brokers it knows have posted opportunities. The market is interested in diversifying and may well be interested in an aircraft hull risk. The exchange allows brokers to securely make risk information available to markets that they work with. Markets can review information at their leisure before deciding whether to move forward. If, after analyzing the information available, the market is interested in bidding on the risk, it enters the terms of its bid on the exchange's